Friends, in this video for ithought Advisor, I'm going to talk to you on the topic making your investing defensive. Investment conversations with leads, clients or peers always leads us to a point where you ask, what would you like your investing to be? A common answer or a very popular answer is that I want to take maximum risk. Then that raises a secondary question. Would you want to always run taking the highest risk at all times? And then you see a slightly different response. People are not too sure. Even somebody who says, I have the risk appetite and I want to take high risk, tends to soften a bit when you ask him a question whether he wants to take the same risk at all times. Then we come to a question that's very relevant, which is, when should you take lesser risks? Most investors tend to take lesser risks only after they are in a position of weakness. Most people don't seem inclined to take lesser risks or lower their risks when they are in a position of strength. So when the going is good, you don't want to lower your risks and go to a safer place. You don't want to move from where the action is. This is where the nuance starts to work. The successive investors take lower risks as their performance keeps going up and as their portfolio starts delivering big. On the contrary, newer investors, smaller investors tend to be doing exactly the opposite. And it is the smaller investor or the newer investor who cannot afford to lose money even notionally because they are not used to seeing notional loss in their portfolios. So if you are a new participant to stock market or somebody with a low risk appetite, when your performance keeps going up, you need to make your portfolio more and more defensive. As your portfolio keeps rising, you make your portfolio one tad more defensive. So making your portfolio defensive is a necessity for every kind of investor, because as the market context changes, as valuations keep rising, the risks keep rising faster. And it is the investor's duty to lower that risk and bring it to a controllable or a manageable level. Most investors don't give time to this kind of activity. They feel risk management is not going to give them returns, so they might as well keep on going behind ideas. So investors chase ideas when they should actually be going behind risk management. When they should be taking cover, security, safety, they are out there hunting in the wild. Making your portfolio defensive is the investor's responsibility. He needs to understand his duty. If he is having an advisor, he still needs to respect his own duty and then ensure that the advisor does his duty. Many times I have seen that when I was willing to do my duty, the investor was not willing to do his duty because he is layering his judgment over my judgment. I am talking from a position of overall security of the portfolio. He is talking only from the point of view of returns. While I respect the need for returns, my tendency is to respect risk management at least a few notches higher, because if you want to get returns, you need to be always making that extra effort to manage your risks better. But volatile markets where easy money is there for the ask, markets where you see sharp spikes in valuations or stock prices, make investors think that making money is easy. Investors are led to that belief, and when they believe it is easy to make money, they don't want to be defensive. They don't want to make their potential returns. They don't want to make their portfolios less risky. They don't want defensive stance in their investing. They want to go hunting returns. We have seen that behavior even in the recent weeks. We'll probably see it again. But investors need to learn this sooner than later. They need to understand that when returns are looking very, very attractive, when opportunities look very rosy, it is equally important to understand how much risks you are taking at that time. It's important to keep your risks in check and never let them run out of control. Making your portfolio defensive is an investor's duty, and ensuring that investors understand the importance of making the portfolio defensive is the advisor's duty. If both people know their duty and act in line with what they need to do, good things will always happen in an investor's portfolio. Thank you for watching this video.